Good day. I'm Jan Leasure, and I want to welcome you to Jan's Mortgage Minute. Today we're going to talk a little bit about refinancing. Rates are at a phenomenal 3 to 5% on a 30-year fixed loan. This would be the time to consider refinancing if you're ever going to do it. When I purchased my first home, rates were at 17%, almost as high as your MasterCard. This would be the time to consider a refinance. What are some of the reasons that you should look at before you refinance? Are you in an adjustable rate loan that goes up and down as the years go on? If you are, this would be the time to look at a 30-year fixed and lock in your rate. Are you currently in a 30-year fixed where your rate exceeds 5%? You should talk to your loan officer and discuss whether or not this would be the time for you to refinance and get a 30-year fixed locked in at 4%. Should you extend the term of your loan? If you feel that you're not liquid enough because everything is so difficult in our recessive economy, this would be the time to look at going from a 10-year or a 15-year into a 30-year fixed. You might feel the ease of a lesser payment, and it might make you feel more liquid and secure when you're paying your bills. On the converse, if you're in a 30-year fixed and you're at 5% or higher, this might be the time for you to look at going into a 10 or 15-year loan. You might be able to keep your payment exactly the same or possibly even a little bit less and cut off hundreds of thousands of dollars for the next 10 to 15 years. How is your credit? Have you taken a look at your credit score lately? If not, I think that you should contact your local loan officer and have your credit run. Evaluate your credit, go over it, and learn what you need in order to refinance. In today's market, a 650 score used to be a really good one. Today you might need 680 or greater in order to refinance. This is something that you should take care of, and you can raise your score before you get involved in the refinance process. Do you have steady employment? If you've been employed for the last 24 months or more, or if you've been in school full-time, recently graduated, and just started a job yesterday, you will be able to qualify to refinance. Talk to your local loan officer. Do you know the value of your home? In order to refinance in today's crazy market, it's important to know what the value of your home is. Do you know if you have a 50% loan to value? If your home is worth $100,000, do you owe $50,000 or less? Or if your home is worth $100,000, do you owe $110,000? In order to find out the value of your home, you might go to a website like Zillow.com, Zillow.com, and get an idea. Of course, the only way to really find out how much your home is worth is to contact your local real estate agent, have them pull some comps for you so that you can see what's happening in your neighborhood with local sales, or to apply for a refinance and get an official appraisal by a licensed appraiser in your state. Do you have a prepayment penalty on your loan? If you do, this would definitely be the time to refinance out of it and get yourself into a low fixed rate mortgage so that you can feel safe and comfortable. Calculate your savings in advance. If you take a look online, you can Google a mortgage calculator and you'll be able to see what your payment would be for your principal and interest on a 15, a 10, or a 30-year fixed mortgage. Add to that 1/12 of your homeowner's insurance and 1/12 of your annual property taxes, and that will give you your fully amortized principal and interest payment so that you'll know in advance before you sit down with your loan officer. Once again, this is Jan Leasure with Jan's Mortgage Minute, your licensed loan officer in the states of Illinois and Wisconsin. Thank you.